there's really three types of innovation I'm seeing at the moment. I see technological innovation, I see business model innovation, and I see what I think of as risk assessment innovation. And I think that there's a lot of opportunity for both banks and fintechs to partner to bring more consumers and then more small businesses into the financial system. It's worth just briefly outlining why we tend to see some forms of financial exclusion, and then briefly touch on why fintech can help further financial inclusion. So historically, we've seen financial exclusion both for consumers and for small businesses, and it typically comes down to the cost of serving some segments. So in the consumer space, you might have lower income people who have lower balances tend to generate lower interest income, have high needs for being serviced in branches, and might be quite expensive to acquire and to perform risk assessments on. So that's one of the reasons that there's some segments that banks tend to not serve very well. And it's really on the small end of the spectrum. We see the same in the SME space, where SMEs are all alike in that they're all different. They're hard to risk assess, they're hard to serve, and there's tend to be quite heavy regulatory weights associated with the capital you have to hold. So we tend to see that there are segments, particularly in the retail and the SME space, that are excluded. Now, I think fintech has a lot of opportunity to serve some of these segments. I don't like the term fintech very much. I tend to see a lot of partnerships between banks and new financial entrants. But I think there's a lot of opportunity for innovation that can help us reach some of these excluded individuals. So I think there's really three types of innovation I'm seeing at the moment. I see technological innovation, I see business model innovation, and I see what I think of as risk assessment innovation. And I think that there's a lot of opportunity for both banks and fintechs to partner to bring more consumers and then more small businesses into the financial system. So just touching briefly on those three. So I think some of the places where you've seen a lot of innovation from fintechs recently is in helping bring down the cost of serving small businesses through automation. So, for example, in my own case, where we offer financing to small businesses, we try and make as many of our decisions in an automated way as we can. And that helps us bring down the marginal cost and offer financing to more small businesses. I think that's really nice because you can help small businesses grow, but it also is nice because you can see routes for partnerships with banks who might not want to serve this segment anyway themselves. The other place where I see fintechs being able to drive a strong social mission is in getting better at assessing the risk associated with some of the segments that are otherwise excluded. So, for example, in the consumer space, it can be quite difficult to assess the risk of an individual that doesn't have a credit history. And you see fintechs, particularly in the US at the moment, who are trying to do risk assessment based on other variables that are more easily available. For example, somebody's educational history, what grades did they get, what was their SAT score, those sorts of things can become risk predictors. And I think fintechs are well positioned with more agile data infrastructure to do some of that risk assessment work and help more individuals come into the financial system. But I think actually the place where I see the most innovation happening that will further a form of social good and bring more individuals into the financial system is in business model innovation. So we've historically seen that financial services are offered mostly by banks, and they were offered directly to small businesses or to individuals. What we're beginning to see now is that some of the modern tech companies, Apple, Amazon, Shopify, Google, are offering financial services. For example, if you're a small business selling on Amazon, Amazon can offer you lending, they can offer you a bank account. And because of the unit economics associated with being a seller on the Amazon platform, it can often be attractive for Amazon to offer financial services, even to segments that are otherwise excluded or quite hard to serve. So I think by bundling financial services with some of these other offerings that modern tech companies have, we'll be able to reach a lot more small businesses. And I really see a lot of innovation happening in this space where you see tech companies with a good customer relationship being powered by regulated institutions like banks to offer financing. So those are kind of a couple of the ways in which I see fintech being able to drive a mission of social good and bring more both consumers and small business into the financial system.